Welcome back. The weakness in Nifty IT deepening as we speak. IT is definitely not having a good day. But on the other end of the spectrum, you're seeing once again your economy-led stocks really firing up. A trend that Niraj was also mentioning this morning, and it seems to be continuing. Dharmesh also very bullish on your infra bets, your defense bets, and we're going to get a few calls from him. Dharmesh, what in this space do you like right now? Because we're going into an election season. If we do have policy continuity as the market is expecting with the same party, same government coming back for a third term, you can expect a lot of action, a lot of announcements in the first 100 days of Modi 3.0, if that's, of course, what eventually happens. What would be your bet or your positioning at this point in anticipation?
See, the top bet in the defense space has been Hindustan Aeronautics. So we have been holding this position from quite some time. And the good part is from 60,000 odd crores of order books to 94,000 odd crores, which it has reached right now. And these are long-term gestation contracts, so this continuity is likely to be there. And their tie-ups are happening. I mean, they have tied up with a French company, then they have tied up with the US company, and all these are for light combat aircraft manufacturing or helicopter manufacturing, where 80% of the know-how would be transferred, the technology would be transferred to them. And this is what is the key, because once you get the 80-70% of our technology being transferred and 60% of an offset clause setting in, so the dependency of the other players on you rises quite a bit. So provided you have proven your track record. So that company is doing well. We have seen the numbers for the Q4 or almost 11% kind of a top line growth they have reported. I do think this is, it's on an inflection point from where 8-9% kind of a CAGR on the top line can catapult to 12 to 15% kind of a CAGR by the, say, next 3 or 4 years. FY26 and 27, this is likely to be established with 25% kind of an operating margin in place. So a long way to go. It's still cheaper if you compare to Bharat Electronics. So that's the top play in the defense. On the railway side, RVNL is still my preferred bet. The management has been sounding very bullish, and they're targeting around 1 lakh crore of order book when the next budget is rolled out. And that's the area, railway is the area where, a lot of action is expected once the government comes into power and the full-fledged budget is being rolled out. So these two play is the preferred bet. There are many others as well in the basket, but I think valuation-wise in the order book visibility, execution visibility, and the way the transformation is happening in these two companies on the execution front, they made some buy. As of now, I am very sure that the valuation multiples don't justify the stock prices, but that is likely to be the case in a high growth kind of a company. And these are embarking on that trajectory.
All right. So some of the top picks there, RVNL definitely about 284% in the last 12 months. But can the momentum continue is the question. Soni, you want to weigh in on some of these names?
Definitely, Tamanna. The first stock that got discussed, HAL, quite strong, and you can see it heading towards higher targets of 3,700, 3,750 also. And the stock has given a very strong breakout above 3,350. So on a positional, medium-term positional basis, one can definitely hold for higher targets of 37, 3750. If we talk about BEL is also looking very strong. 230 was the target. I think it has already reached, somewhere around 223 today. So maybe a buy on dip for this stock can work out better. Of course, the support lays quite low around 200. So maybe, HL can still give you that figure over BL as of now. And talking about the railway stock theme, RVNL, just looking at the charts, the stock or definitely on a medium-term positional play, we can see it has run up a lot. But from current levels, 240 is a very good support on charts. As long as it's holding, it can retest its higher levels of 285, 290 plus levels. I think the stock can also play in this zone for now.
Okay. The other thing is today, Sony, some of the private banks have kind of slipped. I heard you say that banks would probably be leading, and it seemed like that yesterday. But today they quite haven't done that. So is this ICICI Bank, Kotak performance disappointing, or would you bottom fish here?
I think Neeraj, what we can see is that yesterday Bank Nifty definitely was leading. Today it's very muted, and that's how the trend for Bank Nifty has been overall. If we just make a comparison in the past 2 to 3 months, we can see that's how it performs. Just like one day it gives you that hope, and suddenly it's just muted. So I think what can lead in Bank Nifty, there would be two stocks that one can just focus on. First would be HDFC Bank. Quite well, the correction has happened. It has underperformed. There's a resistance around 1500, but then we have to look at how it has taken the support from 1400. It has risen from those levels and now slowly heading towards 1500. So I think on a medium term positional basis, we can see that it can head towards 1800 as well from current levels, and the support is very strong for 1400 as of now. I think this could be one stock that can definitely contribute to Bank Nifty, the entire space and the entire index. The second stock in private banks that can also contribute would be ICICI Bank. I think this stock we've also seen it has given out a consistent performance above 1040, which was its resistance zone before. It has given a breakout, and regardless of whatever the volatility movement we've seen in the markets in the last 2 weeks, the stock has been holding that defending that support level of 1040, 1050. I think ICICI Bank on a medium term basis, we see 1200 can get tested. So I think HDFC Bank, ICICI Bank together combined can give that support to Bank Nifty.
Okay. Well, on that note, and we still have to take Sony's calls, but I think what is also important to highlight among stocks which are doing well is Tata Technologies, which is in focus after executing a joint venture agreement with BMW Holdings. Let's bring in my colleague Puneet with more perspective on this. Puneet?
This agreement is very, very key for Tata Technologies. Looking at the key details as per the exchange filings now, this JV expected to deliver automotive software, which includes software-defined vehicles. Now, for the premium vehicles, there is a very high content for software, and Tata Technologies works with a lot of these EV as well as the premium players. While they said that the automotive software-defined vehicles solutions for BMW is what they are going to offer. The current stake is 50-50 by both parties in this particular JV, and they say that they will establish automotive hubs in Bangalore, Pune as well as Chennai in India. Now the focus will be delivering automotive software and as well as SDVs, the software defined vehicles for BMW, while they say that this will lead to transformative solutions for business IT solutions as well. Currently, it's very interesting that lately JP Morgan had written a report on the ER&D segment where they had an underperform rating on Tata Technologies, which had a target price of roughly 800 rupees, which is roughly 20-25% below the current market price. Now, they had said that high client concentration was a key factor which was a problem for Tata Technologies, and JVs such as this with the likes of BMW will be key to get out of this high concentration. And they had also mentioned that 46% was the current revenue from these anchor clients such as VinFast previously that they had worked with in 2021, and they say that they needed big evidence such deals like JV with BMW to have a positive view on the stock. So this JV is going to be definitely a very big key trigger for Tata Technologies, and more details are awaited from the same. Back to you.
All right, thank you for that, Puneet. Just wanted a quick word from Dharmesh on, what do you say about a Tata Tech versus some of its peers now after this BMW deal? Remember, the biggest, I would say, headwind or challenge for Tata Tech always was its dependence on VinFast, its largest customer. Does this help?
Yeah, definitely, yes. I mean, this is the brightest feather in the cap for Tata Technologies. And demonstration of technology and development of the various softwares was needed through a big brand coming into the client foray. So that definitely goes well with Tata Technology. And see, Tamanna, this is a future concept stock. How I am seeing the Tata Technology is a doubler if you are going to hold it for 3 to 4 years. So forget about the P multiples, which is there. Numbers will definitely come through, and this is a new age company catering to more of the AI platform, which will be built into the future cars. They are working on that very aggressively, and they have demonstrated their technology prowess as far as the automobile industry is concerned. So 2200 is what we are expecting on the stock price, but you have to wait for 3 years. It's an investment buy. and this definitely helps them to a big distance.
All right. So, Tata Tech having a great day, and you're seeing that sharp spike up as well. What exactly is going to be the details of the deal is what we're hoping to find out from the management. We'll take a very short break, but on the other side, we talk about our stock of the day, ABFRL. What does this demerger mean for shareholders? We're coming back with all of those details in our special research piece after the short break.
Back with India Market Close right here on NDTV Profit, and the markets as they are looking reasonably okay, though you would have to admit that 0.24% lower is nothing dramatic, but it's certainly off from being flattish. But really, I mean, it's not so bad that people need to worry about things. What we haven't done thus far is take Sony's calls. And Sony, can we ask you to give us your recommendations for the afternoon?
Definitely. Niraj, the first pick is Havels, and it's building very aggressive long built-up positions today, somewhere around 18 to 19% of long positions added today already. So Havels is a very strong on charts. Also, we can see 1520, 1500 has had multiple support. From current level to 1560 can be the buy zone. There's a small resistance of 1560. The moment it breaks above that, you can see it firing up towards 1650, 1700 levels. So stop loss 1520 and target of 1700 can be looked for Havels. And this could be also one of the stocks that can perform very well for the whole of April series. So this is the first stock. The second is from the banking space because, I'm holding a bit of a bullish view on Bank Nifty. So the stop loss for Bank Nifty, in the banking space is for PNB. So PNB can be bought at current levels. Keep a stop loss of 122 and target of 132, 134 can be seen for PNB.
Okay. So those are some ideas. Keep in mind a clutch of volume buzzers include an AB Capital and ABFRL. Of course, AB Capital has this upgrade from Macquarie, which is leading to this 10% uptick for that stock as well. So much as we talk about Aditya Birla Fashion Retail, AB Capital is not far behind. Some extremely strong showing by that stock too in the session today. We spoke to Piper Serica's Abhay Agarwal on the global macro trends as well as the uptick in metals in the wake of China's manufacturing PMI rebound. Listen in to what he had to say with regards to that sector.
We have been tracking China, especially Niraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so two investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Niraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
Right, so that was Abhay Agarwal looking at the big picture, but in the immediate sense, markets completely flat this afternoon. Just a few buzzing stocks here and there. I just want to pull up what's happening with Indigo and Spice. That was another story that we've been covering through the day. A rival, Vistara, has been facing trouble with its pilots. Indigo hit its life high, of course, has come off those highs right now. SpiceJet is not doing too badly, actually, in trade about % odd up. Dharmesh, I'm wondering if you find anything interesting in this aviation space, and are you concerned about this shortage or these sort of personnel HR issues with pilots that Vistara is facing?
Yeah, it's a big surprise. I mean, so many airlines getting shut down and still you're having shortage of pilot. So there's something more to it. That is what it appears to me as of now. Having said that, I don't find this space very attractive because of this sensitivity to the fuel prices which are there. So it's again on the rise. Indigo is right now having a trading bump up just because of the issues with the other airlines, be it SpiceJet had an issue, Go Air went out of the service. Earlier you had Jet, Kingfisher, all these things are happening in the space. And it's more of a, I mean, duopoly kind of a situation coming out. So that is the advantage which this airlines is having. But prices, if you look at the air ticket prices, I mean, they are more or less stable to flattish kind of a thing. And they are unable to accommodate, in spite of the traffic, a higher air ticket prices with respect to the rise in the fuel prices. So assuming a scenario where, fuel prices goes to $120 a barrel, it will be difficult for these companies to be profitable, and that is where the entire problem lies. Trading plays are on, and as of now, Indigo is enjoying the trading bump up.
Yeah. For some reason, Jet Airways also up another 5% today. Since we're talking about the airline's current and hopefully future, Jet Airways also on a circuit today. Let's turn our attention to what's happening on the derivative side of things. Agam is standing by with the F&O cues. Agam, is it as flat and listless on your side?
It certainly is. It certainly is. We are looking at a very quiet day of trade today, and the benchmarks have continued to move sideways, largely without any sharp movements on either side of in terms of direction, even in terms of the futures. While the underlying has remaining absolutely flat at the moment, we are looking at not too much traction with respect to an increase in the Nifty futures. The Bank Nifty futures again, Again, very flattish movements there and very little change in open interest. Even in terms of the options market, what you may realize is that there's a continuation of writing around the 22,500 mark, as you can see here. Both with an increase of calls and puts, and a bit of unwinding around the 22,600 calls and puts as well. Let's move on and talk about how things are panning out as far as your overall open interest distribution is concerned. And surprisingly, 22,500 call is the one which continues to remain active at the moment. Of course, on the lower end, you'll have plenty of other strikes, including something like a 22,000, 22,100 puts, where there is a little bit more of a support building up. In terms of the Fin Nifty, where we have a lot of options expiry, that is also something that we're going to be tracking, but that's also largely flattish. Coming down to stocks, we are looking at shorts in Inamdar as well as Gujarat Gas. ABFRL, it probably is the stock of the day, or one of them at least, because that's up as much as nearly 12%. A lot of longs building in there. Longs for Ramco Cement and Havels as well. And in terms of stocks which are seeing unwinding, that's where we do see short covering for JK Cement and Emphasis. And of course, Info Edge, ABB as well as Pidilite. Even though the underlying is not declining by a significant amount, we are looking at some amount of longs and winding coming through there as well. All in all, it's a very, very quiet day of trade. And it's a wait and watch whether or not tomorrow's Bank Nifty expiry also shows similar characteristics.
Mm-hmm. Well, watch out for these for sure. Agam, thanks for putting that into perspective. So that's some sense of the derivative space as it stands right now, and some select pockets out there reacting the way they are. You look at the F&O activity, you look at the volume uptick that is coming into some of the stocks that have moved around today, and there is the other distinct fear of PSUs catching up. So it's not just restricted to a BEL, which is up today on very high volumes, but if you look at the Nifty 50 gainers as well, a clutch of PSU names have done rather well for themselves. Dharmesh, maybe for a brief while, it seemed that, oh, people will not want to touch PSUs. Is that changing? I mean, I'd rather be bottom up. And if so, are there PSU businesses that you like?
I mean, PSU businesses, the trade is very clear. It's the infra space which we talked about and the defense space. So these are the two spaces which have been doing fairly well, and the auto inflow has been great. Valuation-wise, since we are not used to the PE multiples or EV by EBITDA multiples of most of the PSUs looking historically, and then it becomes very difficult to justify the current valuation multiples. So, but look at the growth trajectory where these companies are heading to. Like BEL had never had that great order book, which they are sitting on now. HAL, 94,000 odd plus of order book. RVNL closing in on 1 lakh crore of order book. So these are the sizes which these companies have not seen. Almost 3x, book to bill ratio is what they are sitting on, and the visibility getting very strong. Also, infra and defense plays are there out there. Apart from that, I mean, the public sector banking space, which many people talked about earlier, I don't think there's enough juice left out there. So much of the trade has played out. And one can look at companies in the power play like NTPC, Power Grid, and from the metal and mining space, NMDC. So these are the select pockets where still, I mean, if you look at NMDC or NTPC or a Power Grid, the valuations are not that high if you compare them to their private players. So there's still juice left out there with strong ROEs and return ratios in place. So this basket will be there. I think next 1 year, when I do see a turbulent and a difficult market, in that turbulence and difficulty and volatility, these are the sectors and the public sector undertakings with such businesses will do fairly well.
All right. Well, let's get in one more voice. Arvind Chari, CIO, Q India UK. A keen eye on macros, but with equal aplomb on what themes and sectors might work. Good idea about what the global activity is looking like. Arvind, good having you. Thanks for joining in. Well, the growth numbers across the world seem to be picking up. India PMI numbers also looking strong.
Yes.
Is it a good time to bet on manufacturing? If it wasn't for the last 12 months, that is.
If you take a very long view, I think India kind of lost its way on the overall global manufacturing piece, right? So if you look at value-added manufacturing as a share of GDP, all the large countries, China, Korea, Japan, they had a very high share of manufacturing when they were growing. And India has always remained between that 14 to 18%. So from a global supply chain perspective, we kind of missed out on that. We made up in software services, where India's share in global soft services is very high, but manufacturing less so. But it looks like it is coming back in the sense that there is geopolitics in play, because there is this aspect of broad-based globalization, which was part of 1990s and 2000s, that has it's kind of giving way to countries which seem to be friendly, more strategic. And I think India is very well placed in that perspective, right? Where India is a democracy. India is not sided with anyone, but India is not allies, but also friendly with all countries.
India is not China, basically.
India is not China as well, right? I mean, that we know that from a lot of respects, India is not China. And maybe we are getting into some aspects of that manufacturing value chain as we speak. So I think Apple is, as you know, is a big test case. And yesterday there was a report that it has created the most amount of jobs as in that entire Apple ecosystem. So and I had written a piece last year saying that we need many apples a day to keep unemployment at bay, right? Because India's demographic dividend is subject to manufacturing and getting people jobs. And that is one aspect. The way we see as investors on where we see a lot of government intervention. So if you look at the electronics manufacturing chain, be it mobile phones, laptops, consumer electronics, or even semiconductors, there is a government capital subsidy, and there is a government policy deciding who are winners and who are losers. In that, as an investor, long-term investor, you need to be a bit more careful in terms of how you price those opportunities and the valuation comfort, also in terms of the policy comfort. If government changes, will that dramatically change the way India looks at these picking winners and losers in this entire manufacturing consumer electronics? But otherwise, from a global perspective, sitting out, thinking about where India lies in the overall supply chain, global value supply chain, especially in electronics, we seem to be in the right direction. If you look at the government semiconductor capital subsidy program, I think almost $20 billion of capital subsidy, seems that they have really thought it out and laid out in terms of design, chips, which is a later part, and then packaging. And there will be companies which are listed. There are some of them already listed. Maybe the valuation is not comfortable from a valuation perspective, but there are enough opportunities to play. Yeah. But by and large, I think India has missed the global long manufacturing chain.
We were a services play. Maybe we're shifting now. But I'm curious to know two things. One is you talked about government pushed capex.
Yeah.
What about private capex? Are you sort of in wait for when that fires, and then what happens then?
Yeah, I mean, it's been a story that everybody is waiting out for, right? I mean, if you look at the balance sheets of corporates and banks, which are the two aspects which you need to get the private capex, it's been pretty good for the last 2-3 years. Corporates have deleveraged, banks have written off or cleared off and cleaned up their balance sheets. So both the balance sheets are ready, but we still don't see a lot of private capex. Maybe this import substitution-led capex. So India does not want to import end mobile phones, so they have a tax on the end mobile, but then mobile phones gets manufactured. We're seeing those kind of capex going through, and some amount of steel and cement, but broad capex is still not visible. My sense would be, one could be that it is an aspect of the consumption and the income growth. We still seem to be lagging on the consumer demand and and the income part, and maybe companies which should have put in capex do not see that sustained demand over a long period of time, and that's why they are kind of shying away. They may maybe doing some working capital, some brownfield, but you're not seeing very large greenfield activities. That second is, I think, in this aspect of trying to get manufacturing done in India, both for India, make in India, and then make in India and export, you've seen an increase in import duties for many categories. In some sectors, it is beneficial. Maybe in some, it is not, where if you are an intermediate producer, where you're importing some commodity and then you're value adding and exporting, because of that import duty, if the cost of your production is higher, you might not be able to compete. Maybe this is one more reason why you're not seeing that private capex here.
I'm tempted to ask you, in your portfolios, manufacturing is not present?
It is there, but as you know, we are like we desire that discount to fair value, right? So we will play some amount of industrials, we played some amount of manufacturing. But as it gets expensive over our period of cycle of how we think about long-term revenues and earnings, if it goes expensive, then we sell. So we are not constrained to only want to play a theme. We are liquidity cherishers. We value governance, and then we value the fact that we need a margin of safety to play. So we cover all this. The one place where we are seeing some opportunity is consumer durables. Again, getting manufactured in India, it's a manufacturing plus consumption theme. There we are seeing a bit more valuation comfort and a bit more opportunity. But in like electronics manufacturing, for example, it's great opportunity, but it's expensive.
Sector of the day today.
Yeah.
Consumer durables, at least the cooling solutions.
Consumer durables, Symphony, Voltas. You mentioned valuations a couple of times.
Yeah.
Now, this is a losing battle as far as India is concerned. I mean, it seemed expensive to many for a while.
Yeah.
How do you come to terms with that, and where are you still finding those pockets of opportunity which don't seem obscenely overpriced?
We keep getting asked this question, saying that what is a value manager doing in a country like India, right? But value means different things to different people. And as I explained on I think you're that Money Manager show, that for us, it's just a discount to a 2-year forward valuation. So we value companies over a 2.5 year forward, and we cherish a 25% discount to that. And you'll be surprised, or not surprised, that enough companies and enough sectors come and go through the valuation, because India is essentially a mean reverting market. You would see that across time periods, across time cycles, where you will see some 2 quarters are disappointing and the markets kind of lose a bit of confidence and derate those companies, and we are slightly more longer term in terms of how we look at companies, and we are able to buy in. Or when there's too much optimism, we will kind of trim out and sell out. So as a value manager, we'll kind of buy early. As a value manager, we'll kind of sell early. But we keep getting on. We have a 23-year-old track record which shows
any sort of direction on what's on that list.
So
of
right
where
now,
you're finding value?
Financials, and for us, financials means banks, private banks, insurance, general insurance, asset management, broking. All these, especially private banks, seem pretty good in valuations. IT services, we've had reasonably large weight. Consumer discretionary, predominantly two-wheelers, where we've had that positions for long. That has done well for us. And as I said, consumer durables is one space, not consumer staples. Although consumer staples are underperformed, but it's still not in our valuation band. But consumer durables is something that we are seeing some. It's very name specific. It's not a broad sector, but there are opportunities everywhere. And as I said, we've have a 23-year-old track record where we keep finding values over what we define value and margin of safety and our horizon. So
my last question.
Yes.
Metals. Are you finding favor there?
As a cyclical play, we have a lower valuation threshold when it's a cyclical play. Couple of names are getting interesting for us, but nothing as of now. But we've been running, as if I can give one name, Tata Steel has been there in our portfolio for some time. But 2-3 other names are getting interesting, but yeah, not yet.
You talked about IT.
Yeah.
IT is, I think, lost favor for a while right now. Are you seeing, a change in that momentum or anything specifically that, you can point us?
I think we have seen this time and again, right? I think just go back to 2015-17 period when digital was supposed to be the big thing, and there was a view that digital will be, like IT services will miss out on the digital play, but it so happened in the next 3-4 years that they were the biggest beneficiaries of the entire digital mode because they were the ones who were implementing digital services across different organizations. Maybe AI is today that aspect of fear plus the global slowdown. From a long-term valuation perspective and from the long-term cost-benefit analysis of is the Indian IT services or the Indian IT coder cheaper than a Western coder or a same resource in Western, that argument remains, right? And there is so much more. AI will also require so much more digitization and software and services and maintenance, which is what we play IT services. Right? This is the bread and butter of these entities. So from a valuation comfort and from a growth perspective, we are okay. We know it goes through a lot of cycles because it is also global sector. It gets determined a lot because of global cycles.
Yeah.
We're happy to hold it over a period of time.
Great. Arvind, we'll leave it at that. Thanks so much for taking the time out and being with us in our studios today.
Thank
really
you so much.
Your time.
Thank you so much.
Yeah, Arvind Chari there, with that big picture, and definitely IT is in that picture, though it might not be a current favorite. All right, just a few minutes to go for closing. Let me go across to Sony for any last BTST calls.
Right, Tamanna, for BTST, we can look at MCX. I think MCX is looking quite strong. It has given a very good breakout. It's hovering somewhere around 3,600 as of now. So keeping a stop loss of 3,500 and a target of 3,700, 3,730 can be seen as BTST trade.
Okay. And Dharmesh, before we let you go, anything in the recent news flow that has stood out and made you contemplate investments?
Yeah, we have come out with an initiating coverage on a small company, it's a 3,300 crore market cap company, dissect System Limited, primarily into system integration of the PCBs, catering to the Indian Defence Services or DRDO, BEL, HAL are their clients. And they have also a tie-up with Israeli companies who are into defense equipment manufacturing. Recently, they have tied up with Lockheed Martin of US. So it's in a nutshell, it's a 1,200 crore is the revenue they do as of now, with around 6% kind of an operating margin with a PAT of 70 crores. We are expecting this revenue top line to go from 1,200 crores to 2,000 odd crores in next 2 years time frame, with these tie-ups coming into play with an operating margin improvement of around 100 basis point and a PAT of around 122 crores. So these are very conservative estimates. I do expect this company to do much better. They have also been developing a system called NIAT for the railway safety thing, and that's around 1.5 kilometers. If some object is there on the track, the system can identify that, and that's a mandate given from the railway ministry itself to them to develop some kind of projects. So there are many multiple triggers which are happening and playing out there. Primarily, system integration is around 80-84% of the top line. Cable harness wires around 6-7%, and 3-4% is the kitting, which is also picking up in a big way. So 60% of an offset flows for this company, which the government of India mandates for any defense equipment to be manufactured in India, offers well for this. So this is an interesting play. As of now, it's around 300 kind of a stock price. We have come out with our target price of 379, which is likely to be revised and re-rated going forward.
Yeah. Dharmesh, just one quick take on what I think is clearly the stock of the day. ABFRL looks like it's going to end also on a strong note. How much value do you see in this demerger plan, and would you take a bet on it right now?
Yeah, Tamanna, just from the trading perspective and the relative value play, if you compare this with trend, there's definitely a value in the offering. Around 60-70% kind of an upside can still be there based on this demerger. Because if you look at trend, it's primarily a business driven not on brands but for quality and value proposition for the pricing of their products. So that is where the entire trigger was there. And through this demerger, this is likely to happen because Pantaloon and the other non-branded items will come into one segment, and the Louis Phillips of the world will come into one. So let's see how scalable and per unit ROC and ROEs this ABRL is able to do it. That is still to be checked. But I do think financial leverage and the operating play will definitely set in, and this relative concept of valuation will give it further upside of around 40-50% from the current levels. But business-wise, I am not at all bullish on this segment, be it trend or be it ABFRL.
Got it. Sony, Dharmesh, thank you so much for taking the time out and being with us throughout the show today. Really appreciate the times, both of you. And as we wrap up the markets, a quick snapshot of the Nifty heat map, just to show you how we are ending. We are ending flat, so, and that's why, in fact, you could argue marginally in the green if you will, but the heat map should come up on your screen. And some gains to autos in particular, because you're seeing Tata Motors, Bajaj Auto and BPCL right there in the top draw. There's some flavor of FMCG because Tata Consumer and Nestle are also amongst the top gainers. Not too many losers, but private banks certainly sulking, with Kotak Bank as well as ICICI Bank in the red. IT sulking a little bit, and which is why you have that pressure on the index. But the market breadth has stayed solid, and the broader markets, Tamanna, have better action.
Absolutely. Nothing too much happening here in terms of the key indices. I think auto, IT, as you said, is a real pain point. But look at the mid-cap index, about 1% up. I want to pull up small cap as well and see what's happening there. Yes, absolutely 1% up. Let's pull up your sectoral breakdown and see what's worked. Public sector companies in focus today should be close to the top. Media for second consecutive session has done well. Metals also continue to show that kind of a strength. The auto index overall has not done too badly. Actually, I wouldn't say they're massive losers today, save Ford and IT. But specific stories that we should also pick up and see at close, I would say in ABFRL, Atanla, some of the buzzing stocks today. Let's see how they've closed. ABFRL finally 12% up. Symphony, another stock that has done well today. I'm curious to see how Tata Tech finally closed. It had a fair bit of news flow, a positive order flow actually, which showed action there. Actually, Niraj, with the exception of TCS, the entire Tata pack has had a pretty decent day.
Yeah.
If I add in Tata Investments as well. So TCS, the exception there, but a Tamo, a Tata Steel, a Tata Consumer, and I don't know if you can show all of them together or one by one. It's a good day for the Tata Group companies in that sense. Even a Tata Consumer up about 4%.
And most of them have news, especially Tata Tech, but the others too. But it's looked at interesting there in the market breadth. As we wrap up, just show the market breadth, because I think that was important. Yesterday we had fabulous market breadth. I think today too it's not been too bad. It's pretty much been this way since the start of the trading day. So therefore 2 days of very strong breadth. May these last.
Yeah. We'll, wait and watch how opening trade is tomorrow. So you know where you have to come back for that. Back to NDTV Profit, and we'll see you back on India Market Open at 8 a.m. tomorrow. But in the interim, from Niraj, me and the entire team that put this show together, thank you so much for watching. Stay tuned. A lot more coming up on the